Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
What's going on out there? It's August 7th. I'm Frank Curzio. It's the Wall Street Unplugged. So we're the headlines and tell you what's really moving these markets. So it is Wednesday, and I have a fantastic interview for you today. It's with the legend. Yes, I'm calling him a legend since he's been in the business for over 30 years and has one of the most popular investment shows for 10 years, which is on Fox Business. His name is Charles Payne. I know Charles for over 10 years, used to be on Fox Business early morning. I remember waking up at 4:30. They used to send the car to Queens, New York, get there by 5:15, get ready for a 6:30 hit. I was on 3-4 times a day. It was when I worked at the Street, which was interesting because Kramer just signed his deal with CNBC for Mad Money, so there's a little conflict there. Probably the start of them letting me go with everything going on. I mean, along with the company falling apart and seeing a big slowdown and stuff. But yeah, when I see Charles now, I'm glad we both look better now. We're in much better shape since we were both very big guys back then. And we used to have panels. And there were two couches, and they used to face each other. So we always made sure we sat on opposite couches. Otherwise, there'll just be two of us, and we did it one time. There's two of us on one couch, and there'd be like 3 or 4 people on the other, because there's a lot of, good-looking skinny people sometimes on Fox Business. So, we made sure, all right, you got the right couch, I got the left couch, and I'm glad we both look a lot better from back then, which is really cool. But Charles is a really, really big name on Fox now. He was interviewed by on Hannity 2 days ago. He fills in for some of the top late night hosts, which gets millions and millions and millions of viewers, those shows. Yet he took the time to come on Wall Street Unplugged, which I'm very grateful for. And in this interview, he's going to talk about the Fed being behind the curve, how economists are absolutely out of their minds when they say our economy's strong. Remember, he's dialed in kind of like, I'm dialed in, where this podcast goes out to a lot of people and getting emails all the time and seeing, real world stuff before we get it 3 months later, a month later in data, which, economists like to look at, which is lagging. He's going to share some of his favorite stocks, sectors. Also, we're going to talk politics. It relates to your portfolio, including Kamala's new vice president choice, and how to construct your portfolio based on who wins the election. Lastly, the part I love most, Charles is going to get real personal. He's going to talk about his grandparents, how hard they worked, how they paved the way for him to write a new book on why every person in America needs to have exposure to the stock market and how they can limit their risk through different times. So it's really cool. I thought it was relevant, especially seeing what's going on with the market and how volatile it is. Great stuff. Be prepared. Awesome. And here's my interview with Charles right now. Charles Payne, thanks so much for joining us on Wall Street Unplugged.
It's great to be here, my man.
Well, it's been a while, and I want to start off right off the bat and say I'm truly happy for your success. I'm seeing you everywhere. My friends who don't even follow me from an investment standpoint are always talking and saying great things about you. I like the guy Charles Payne. He's real. He's awesome on TV. I'm like, he's all right. But I'm really happy for your success, man. You deserve it.
Thanks. I appreciate it. Thank you very much.
Well, I want to get into the markets because we saw over the past, I'd say 5, 6, 7 trading days or so, a lot of volatility. So Japan carry trade, big reversal there. So a lot of volatility in the market came down. Now it's rebounding. But there's a lot of people calling for the Fed to have an emergency rate cut. Are you on the side of that? Do you think they should? Yields are saying that they're behind the curve. What are your thoughts on an emergency rate cut? Do you think it's necessary? Do you think it should happen right away?
I would like to see it. I've been saying for a while now that the Fed is behind. And here's my problem with the whole thing, Frank. The way these economists, particularly at the Federal Reserve, measure things, I think they miss the true state of the U.S. economy. Whenever I hear one of these economists say something like the consumer is strong, I cringe. I just cringe, particularly this earnings season. Every company of every size and every category is telling us the exact opposite, that the consumer is not strong. And I think Five Below, for me, probably had one of the more telling earnings reports because they talked about the disproportionality of this slowing economy and how it's crushing their core low-income household. But Also, they're seeing more upper income households use their service. Obviously, not enough to make up for their losses. And it's company after company after company, and of course they've got stores. I think 1,500 stores in 43 states. There's no survey that the government does that can give me a better insight than that. There's just not. And by the way, these surveys are awful these days. 43%, 50% response rate.
Yeah.
And so the policies being made on the back of really awful data with massive revisions. And every time the revisions are put out there, the narrative doesn't change. You can come back with a harsh negative revision of the retail sales report, and the next day I can bring on 50 of the best economists on Wall Street. The consumer is strong. I'm like, what are you? So here's the problem. There is an inflationary aspect still in the economy, but where is it coming from? Now, Economics 101 says that inflation is too much money chasing too few goods. So where is the money coming from? Because that presupposes that we all have too much cash and we're out there driving prices up. But right now, the money is coming from the top 20% of income households in the federal government. The other 80% is hurting. And as you go down the scale, hurting even more. Are we going to wait for the top 20% to start hurting before we stop? And by the way, the federal government's not going to stop spending. So we're saying, hey, your credit card bill when we started this rate hike cycle was maybe 17%. Now it's 23%. Mm-hmm. Delinquencies are on the rise. And by the way, soon they're going to have to start paying back these college loan delinquencies. That I think that comes off pause in a month or two, right? And one day we're going to get a report not too long from now where almost every major category of delinquency is going to be above pre-pandemic levels. And that's going to be the emergency. So when people say we don't want the Fed to sort of trigger any panic, I don't think they understand that the America is in a panic mode. 3 out of 5 Americans say we're in a recession already, according to a survey from a firm. And I think that gets to the heart of it. Recession is personal. It's not these folks at the National Bureau of Economic Research who seem to have their own opinion and change it all the time and are always late to the party.
Charles, is it political? Because I'm with you, and you probably get tons of emails with your show and have a great following on Twitter. This podcast goes out to 100 countries. We've got a pretty big following, but I hear from these people as well. And it's not just you're hearing from them. What are these economists looking at? Because when I see, one thing that has stood up pretty much for 4 years now, right when we reopened, is the travel trade. And now we're seeing that break down. We're seeing airlines reporting weak earnings unexpected. Marriott, Hilton, we just saw Airbnb get crushed. Now Disney's saying that parks, we don't expect traffic to be that busy to the park. We're seeing it across the board. What are the economists not getting? I don't understand. Is it political? Is it, hey, we have to say that the economy is doing great? Because when you look under the surface, especially when you move government spending, people are really, really struggling, and they're cutting back. Every company, like you said, every company on these conference calls during this earnings season has said they're either cutting back or they're seeing the consumer cutting back or they're expecting them to cut back within the coming quarters.
I think too much of it is political. I can't say how much, but when we had those back-to-back negative GDP numbers, and they said, well, that's not going to trigger, that's not a recession, even though offhand it was always considered a sign of recession. I went and I looked at the bios of everyone in the MBER, and I was really shocked. Some of these folks, I don't think we realize who the economists are who are driving this economy. Like there's some of them are really to the far left. And I didn't realize how many different schools of economics have sprung up in the last 20 years. And a lot of them are steeped in left-wing ideology, including Janet Yellen, by the way. If you look at work that her and her husband have put together about 20, 30, 40 years ago, and by the way, they met at the Federal Reserve, it's really far left. Often she'll talk about her dad, who was a doctor, and, they lived in a neighborhood where there was, people who were well off, but people who were poor. He would help the poor people and not charge them. So I understand this sort of sympathetic where she comes from. Mary Daly, sort of the same way. I did even get a chance to ask Mary Daly. She sort of deflected a little bit, which is fine. But I think politics plays a significant role in it. And I think it's unfortunate because I think their inability to make the right decision, maybe to protect the current administration, is hurting the poor people that they keep telling everyone they care about.
It is interesting. And speaking of politics, this is what I love. I think other channels, right? And Make Money with Charles Payne, which you have is on 2 p.m. is you're mixing it because it's very important to talk politics. Sometimes people don't want to talk politics, but it relates to your investments and you have to. what do you see when it comes to the political front of, we have Kamala, her choice of VP is Tim Walz, where I was surprised it wasn't Shapiro. Did she make a big mistake here? Because for me, what I look at is, okay, we're way left here. And this is, more woke this way. Did she make a mistake with this pick? Because it seems like she did. I thought Shapiro would have been the better pick to kind of unite the party a little bit. And is that going to have, just ramifications for if she does get elected, if she beats Trump? I mean, how does that affect the decision in terms of investments?
Well, I think yesterday was the first biggest Christmas gift Donald Trump has got this year. Mm-hmm. Now, whether he messes it up,
just keep your mouth shut.
Remains to be seen. Yep. But she gave him the biggest Christmas gift he may have all year long. Honestly, considering the momentum that she's had, which is a wonderful thing. When you control the media and Hollywood and all the entertainers, and they can package you in a way you don't even. This is the basement strategy all over again, and it's working so far. But golly, not to go with Shapiro in that tough state, which might decide the presidency, Pennsylvania, and to go with someone who sat around and watched the state burn to the ground, who appeased, people, the Black Lives Matter bunch, who's appeased a whole lot of other folks who are anti-American, certainly anti-capitalism. Mm-hmm. Is really amazing. It really is amazing. But I think it goes also against all of the rebranding that they've tried. That she doesn't want to have Medicare for all. Well, that's what he's trying to do in his state. Mm-hmm. That she doesn't want open borders. Well, that's what he's done in his state. Mm-hmm. I think the parental part of it too, which a lot of people don't, she said some things in the past about the children being really the wards of the state. And, the sort of gender affirming care. 13 years old, you probably shouldn't let a kid make a decision about certain things that they might regret when they're 20 or 30 or 40 or 50, right? And we don't let them drink and we don't let them smoke. So she went so far left with this, but it does underscore who she is in her heart of hearts. And again, if President Trump cannot find a way to exploit that, then it's unfortunate. But I think the key, though, Frank, when it comes to the economy, is that they tried to sell the vibe yesterday. Mm-hmm. Last night they were selling vibe. If you pay really close attention, they kept saying, "We're happy. We're the happy party. We're selling a vibe." So in other words, don't worry that you can't pay your credit card bill. Be happy, and that's exactly what they're trying to sell. They're trying to sell this notion of peacefulness and happiness over prosperity. And listen, I remember not long ago when Jay-Z was being interviewed by someone, maybe it was Charlemagne or someone who said, hey, Trump has done really well for Black people financially. And he said, well, there's more to life than money. Huh? What? Huh?
What? Yeah. I mean, people want to say that, but
you ever spit out of your mouth? I mean, you kidding me?
Yep. Yeah. That's great. So I love that you've invested such a long time, right? I mean, I think your show is going on amazing. Congratulations. I think it's going on 10 years, if I'm right?
Yeah.
So, and plus you have over 30 years of experience. I've been doing this for a long time as well. You're great at investing based on what the market is giving you. And let's say if Kamala wins, just let's say, how do you change your portfolio? How do you advise if it's clients or, even on your show? Listen, if it happens, it happens. And if you want it, you want it. You don't want it, but you can't fight it. I mean, there's significant differences in terms of how you should structure your portfolio. I mean, we just saw SunPower just file for bankruptcy. EV demand's coming down. We saw one party say, obviously, we don't want fracking. We want to ban fracking. Defense companies, we have, one administration that's in a lot of wars, and in the past with Trump, we had no wars. And even when it comes to Bitcoin, one's a clear leader and the other is, listen, both of them didn't like it, but this current administration really attacked it. They went after the banks and said, no one's doing anything with crypto. We're coming after you. I mean, do you structure your portfolio in a certain way based on not just going into November, if you get a hint on who's leading and who's not based on the polls, which we never know, but how do you structure your portfolio? Do you change, or because it seems like a lot of the industry would be really impacted based on who wins?
I try to do two things. I try to find ideas that should benefit no matter who's in office. I mean, we are still a $26 trillion economy, a $24 trillion economy and there are going to be decided winners, companies that have products that people want, they'll have pricing power, they'll take market share. And so, those companies I still want to try to find and focus on. And then sometimes there's a reverse psychological aspect of it, right? President Obama was the best gun salesman in history, and it was reflected in gun stocks, right? So, because he was so anti-gun, people kept buying as many as they could get, thinking that maybe if he did have a chance, he probably would have prohibited them. We heard traces of that yesterday in the VP announcement. Like, we're coming after your guns, right? That kind of stuff. Fracking obviously would be a really, really serious situation. Although here again, ironically though, right now it's so funny. I saw on Bloomberg the other day they were giving somebody a hard time, maybe a Republican, that we have this record amount of oil production now under Biden, and as if the two were correlated. Of course, oil, it takes a while to build rigs and to do the fracking and the build out and all that stuff. What's happening in the oil market right now is New Mexico. And no one's talking about it. I call it the New Mexico miracle. It's amazing what's happened there, and also efficiency. In the meantime, we're down like 600-700 rigs. And so, because all of this stuff happens with a lag, as the New Mexico miracle peaks, and we look for new production, there's no production. I think oil companies might go up under Harris administration. Unfortunately, I think the general public, though, might be paying $6 a gallon.
Yeah.
And by the way, don't think they don't want oil to go up. That's the only way they can sell EVs if gasoline is $6 a gallon.
Yep.
So sometimes there's definitely going to be correlations, but sometimes they actually may be not exactly what they seem initially. So we got to dig a little bit deeper to say, before we sell the oil stocks, supply and demand, if they limit supply, and we know there's not going to be a correlating drop off in demand right away, no matter what they say, then you may want to own oil stocks under Biden administration. Under Harris administration.
Yeah, that makes a good. Yeah, and that did happen too, right? The oil companies started going higher. They're like, wait a minute, why is this happening? That's really the beginning. What other sectors, real quick, that you like? I find it interesting that the travel trade was there, and these stocks have gone gangbusters since the opening of 2020. But what I'm noticing right now is they're really beating down retailers. VF Corp on fire. You're looking at just companies have been annihilated, like very low expectation stocks. You see Ralph Lauren, you also see Shopify up tremendously today.
Yeah.
It seems like, the rotation is, some of these sectors have been beat up because the consumer's so bad that just less than bad news is pushing these things higher. But that's just one sector. Is there other sectors that you're looking at that you're saying, hey, this is what we need to invest in because they already got hit based on, those expectations of a weak economy where they're trading and they've already been hit 20-30%, some of these names. Are you seeing any opportunities?
I am, and let me just pick up on the retail thing, right? Because one of my big ones this year was Gap stores, and what's happened is, and Abercrombie and Fitch also, and then by the way, we took profits on Abercrombie and Fitch, and we just went back in for our subscribers this week. What we're seeing is a consumer now that is zeroing in on what they want. So they want to go to a store where they can pick up something for $100 or less, a specific item. So you go into a Gap store and you pick up a couple of pair of blue jeans or Abercrombie and Fitch. They can't go into these big stores and buy a whole bunch of different things anymore. And one thing we do know is the American consumer is going to consume, even if it means record-breaking credit card stuff. But they have pulled back on the more elaborate stuff. And so I think, listen, you can't go Airbnb, but you can buy yourself a pair of jeans. And so, that kind of stuff, I still think there'll be opportunities within that space. Dick's Sporting Goods is a stock, an amazing company that's oversold, to your point. I think something like that may do well. We're overweight industrials. I just think that, some of the onshoring stuff will benefit them. Some of the Inflation Reduction Act stuff will benefit them. And it's also, I just think that they're just great businesses that have been overlooked. A lot of money was taken out of all these sectors at one point this year. People were selling great stocks just to buy the Magnificent Seven. And I think that starts to reverse and money starts to seek real, true, honest value again. So we're overweight there. I'm not heavy on the financials. I know a lot of people love them. I think Goldman, though, it's just been doing really well. JP Morgan. I'm looking at regional banks. I'm just not sure how to go at them just yet. I think natural gas is going to be a grand slam. This as they make fossil fuels illegal, they can't do it all, right? They can keep going after crude oil, but there's got to be a bridge. Nuclear, we have to have nuclear. There's a Vertiv the other day. There was an auction that they do for nuclear power, and the auction went up like 1,000% from year over year.
Yeah.
And then they had one of their nuclear power plants where their license was extended another 20 or 30 years. So this sort of transition, this war of fossil fuels, the winners, I don't think, certainly not immediately, will be solar or wind, because they're really ineffective. They're not great business models, and I don't think they perfected them yet. Yesterday, SunPower filed for bankruptcy. So I think nuclear and nat gas, those areas, so they're going to be winners because we're just such a big economy. But I think the big issue is when you start punishing success, demonizing it and punishing it otherwise, you don't get it, right? And there's a reason why the U.S. stock market is like over 60% of the global stock market. And I think the next biggest number would be Japan at 6%. We are dominating the world because of our freedoms. And the idea that, hey, you could come up with a better mousetrap in your garage, you can go out there, raise some money, and take it public. And if you become a trillionaire, God bless you, because we know you're going to have coattails. We know you're going to build factories. We know you're going to hire people. We know that those people you hire, their kids will go to college and start to seed the next group of leaders in our nation. We know that's going to happen because it's happened all the time. And when you start to break that down, we don't immediately see the impact of it, but we do see it eventually.
Yeah, you definitely do. And you made a good point about the consumer now, because even HELOCs are starting to surge, right? So even tapping equity with rates down, but still it's easy to take out a loan, probably 11, 12% and pay off those 23, 24, 25% credit cards right now. But you just, betting against the consumer has always been, just not a good thing to do ever. Right?
Listen, I mean, you give us an inch, we'll take it,
Exactly. Exactly. So we talked a lot about volatility, how people navigate through times, and you just recently wrote a book, which I want to get to. It's called Unbreakable Investor. Could you talk a little bit about it? Because when I saw what this was about, it made a lot of sense to me, because I know that even after the credit crisis, there's a lot of people didn't put themselves in the shoes of someone who's 60, 70 years old, who was in retirement, who had all this money and their house, and all of a sudden the market, their 401k goes down 50%. You're looking at their home price went down. Right now, they're like, holy shit, am I going to have to work? I'm 70 years old, and it scares the crap out of you to come back into the market. And I feel like with this book, you address like how to invest during, good times, bad times, and where to put your money through Unbreakable Investor. Talk about it a little bit.
Well, I think the great thing there, Frank, is that there will be bad times. It's inevitable. There's going to be ebbs and flows, right? And right now, when you see how retail investors recoil on a 5% pullback, it just makes you so afraid, because the 10% is coming, the 20% comes, and every 5, 10, 20 years, whatever it is, there's going to be the big one, right? One thing that you and I have both seen, those every single time those has happened, it doesn't take long, maybe a couple of years, maybe a couple of months, and next thing you know, we're at all-time highs again. Now, sometimes it's different stocks that lead us there. The composition of the market may change, but we always end up going back to all-time highs. So the two things I really wanted to focus on was that you have to bend. You have to be able to take certain losses. You have to be able to take hits, manage your portfolio. You want to bend but not break. You want to be an unbreakable investor. The other thing, and I spent a lot of time in the beginning of the book talking about why we do this, because for what I found in my journeys in life is that people want to be rich, but they want their kids to be richer, and so it's not about, get rich quick per se, but if I can raise the platform and make their life and their dreams more accessible, then I've been a great parent and a great grandparent. Now, and so I dedicate the book right out the gate to my grandparents who bought a farm in Alabama in 1952 against all odds. And Frank, they sold everything, man. They worked their ass off. They had the cow, they had the name of the cows, the mules. Cool. And then so I was talking to my aunt recently, like, well, how did they tend the soil? And my grandfather would go around and either find like tools that were thrown away, like an axe, sharpen it up, go in the woods, get a tree, make a handle. I remember going down there as a kid, and the hand plow, those hand plows behind the mules, like it looked easy. I did one damn row, man. I was wiped out. Like I thought the mule was doing all the work. That was hard as hell to hold that thing and keep it in the dirt,
Yeah.
So when I look at what they did, they sacrificed everything to have this house, which didn't have indoor plumbing or water throughout the 70s, so that they could at least make sure that they fed their kids the food they wanted to feed them and provide them with the shelter and maybe advance them a little bit. So that's what I try to do in my life. And I think almost everyone watching this can identify with that. You know, they want to leave their families better off and their communities better off. And so you can do that. The stock market, I mean, listen, honestly, the fix is in, especially now more than ever. All of this money, every time you read about a new program, this trillion, that trillion, this trillion, it all goes into the stock market eventually. It all drives earnings per share eventually. You know, and we know who's going to benefit from it, the top 1%. So I just say we got to get in the middle of that and try to get your piece of the action while you can, because I really do worry about where this country is going longer term, even though we always find a way to correct ourselves, you know, and hopefully that will happen soon. You know, hopefully there'll be some unifying moments. But in the meantime, the fix is in, all of the money pumping, all of this designed ultimately to send the stock market higher. For anyone who sits out the stock market, I just think they're missing an opportunity not only to change their lives, but to change their family's life.
No, it's great stuff. And if someone wants to get the book, I know you have special deals going on for Unbreakable Investor. How could they do that?
Yeah, it's unbreakableinvestor.com. The book is free, but they have to pay for the shipping and handling.
Shipping and handling. Great. So, yeah, guys, definitely check it out. And also check out Charles Payne. So his show, 2 p.m., Make Money with Charles Payne. Charles, I know how busy you are, and it means a lot that you would actually take some time out of your day.
I love you, man. Me and you go back so far. When I saw your email, I got goosebumps. I really love you, man. You're just, first of all, you're smart and you're committed. Like, I don't think, you know what it is? It's hard to find people who have a certain amount of commitment, to be quite honest with you.
Yeah.
You know, a lot of people I know always tell me that they feel sorry for me. I work so much. As soon as I say that, I kind of feel sorry for them, but I won't say it.
Yeah.
Because you wish people had the passion and love about something that didn't think it was toiling as opposed to achieving.
Yeah. At the end of the day, this doesn't work to us. This is what we love to do. So for me, I love it. I love it. I love figuring out. I love even that you can never be perfect at this. So it beats the crap out of you. Just when you have that ego, it smacks you in the face, which I love, because I'm like, man, I'm the greatest. And then I'm like, holy cow, I get that wrong. But it's just the learning process and loving what I do. And I know you're the same. And that's why you're everywhere right now. So again, really happy with success. And thank you so much for taking the time to come on the show. Thanks
a lot, Frank. See you soon.
Talk to you soon, buddy. Thanks. And Charles is great. I love that last part with his grandparents. It's really great when, and this is the part that I love when it comes to interviews, when people get humble, they talk about their background, they get personal. I always felt, as someone that interviews, that was my job. I mean, whatever you're watching this podcast is about investments, you're watching about politics, you're getting an expert in that or whatever, you know, again, whatever you watch, sports as well. And you just, sometimes you're just seeing that person in relationship to that particular subject. And the only thing you know about him is whatever he's talking about in that particular, because that's what he's an expert at. And sometimes you forget these are just regular people, right? They have families. If they get home late, their spouse gets pissed and yells at them. They have crazy kids. You know, it's really cool. I always felt like that's my job. I love getting that personal stuff out of them, because that's the stuff I think people really care about, right? You know, he's an expert. You know, he's going to talk about stocks. You know, he's going to talk about politics, but just seeing the background of where someone came from and being humble. I mean, that's why I love the podcast. I really do love interviewing people, and I'm glad that came out. As someone that knows Charles for a very long time, right from the start of his career, I shouldn't say right at the start of his career, started Fox, really, because he's been around for over 30 years like me. I probably know him for about 15 maybe. But it was just getting a few hits on Fox before getting his own show, before getting really popular. I have to tell you, Charles he's the exact same person off air as he is on air. And believe me, there's not a lot of people like that. And I'm not saying it in a bad way, because, you know, Jim Cramer, for instance, who I love Jim. You know, Jim did a lot for my career. You know, again, I was like, by the street. It wasn't a big deal. I never took it personal. I still consider him a friend. I still talk to him. He was invited to my wedding. He went to my wedding. But you have to understand, with Jim, seeing behind the scenes, I mean, he used to go to street.com and get there at like 5 in the morning. We had to get there like 5:30 in the morning. I used to wake up at 4 and be able to you know, I used to read the entire Wall Street Journal on the train ride there. So much work was done. And he used to come in write a story, do a couple of videos for Street.com, then rush over to do the show with David Faber in the early morning. Then he'd write another 4 stories, which, by the way, it takes most people, they could write 2 stories a week in this industry. I mean, you have to be talented to be able to write that fast and be able to get things out. And then he'd do his show. And his show he had a lot of preparing for. I know he had his son Cliff, his nephew Cliff, who's really cool writing it. And we helped out with the research part. But he also had to prepare for interviews, which, we helped him out with. But interviewing people is a lot of work. You really have to know your shit. I mean, even today I watched Kramer. He's interviewing the Shopify CEO, so, and that was on CNBC. He probably has another interview tonight. So after he's off air, the last thing he wants to be like, hey, everybody, how you doing? So he's probably like, I got to get the fuck out of here. Charles is just Charles. He's just the same exact person when you see him as when he's on air. And I love that. I really do love that about him. He's very real, great guy, and someone I'm proud to call a friend. Now, with that said, I only had about 20 minutes with him because he was going to jump right on the show, right? Making money with Charles Payne. So I didn't get a chance to ask him about cryptos and Bitcoin, who he has a lot of people on his show talking about. But last Thursday, I hosted a free webinar on why Bitcoin and cryptos, the top 100 or so, have incredible upside potential over the next 6 to 12 months based on secular catalysts. And these are new catalysts that are going to change the industry forever. I even offer a significant discount to my Crypto Intelligence newsletter and said, guys, if you want to get in, I think you're going to make a lot of money. And then on Friday and also on Monday, we saw Bitcoin and crypto get hammered due to the unwinding of the Japan carry trade, which came out of nowhere. It's a surprise. I always tell you, you don't have to worry about these markets when you're looking at commercial real estate, right? We see commercial real estate. We know the defaults. We see it. The banks are prepared. You don't have to worry about it, right? Even though everyone's worried about it. It's the things that are surprise. And surprisingly, Japan is they raised rates. They raised rates even though the economy is terrible. Their economy is horrible. The GDP was revised lower recently. Real wage growth is declining. Inflation is slow. You look at recent consumption production data, weaker than expected. I mean, Japan should have been cutting rates, but instead they raised rates. And also now it's going to reduce bond purchases. These are tightening moves. And they did it in an effort to stabilize their currency because everyone was borrowing money from Japan and taking that money and leveraging and putting it into places they could earn more of a return, which is the top technology stocks and risk assets and things like that in Bitcoin. So when you saw the unwinding of this trade, when everyone's caught offside and a big deleveraging event, what happens is you see massive sell-offs because people are selling at any price to get the fuck out. They have to get out. Otherwise, they're going to get annihilated because your risk is unlimited when you're short. Okay, if I put $1,000 into the stock, goes zero, there's $1,000. If you go short, I mean, that stock could go to 10, 50, 100, 3,000, and you're going to get wrecked. So you're forced to get out, and sometimes you're forced to sell really great assets just to get out of the trade. And a lot of that spilled over to crypto, a lot of it spilled over to small caps. And we saw this exceptional downturn, which, again, was a surprise. Timing's everything. I wish I would have did my webinar a day or two later. But it's providing this amazing opportunity because the unwind caused this forced selling and resulted in Bitcoin pushing, which was, pushing 70,000, I think 7-8 days ago. And it went into 50,000 briefly. I think it was down 15% one day on Monday. And then now it's over 65,000 again. It's come back. Every catalyst I mentioned in the webinar still exists. You're seeing massive amount of inflows from new Bitcoin ETFs, which, by the way, held up amazingly through that event. That's a 15% decline in any industry is like a catastrophe, right? That's something going on. And it survived without a beat. In fact, BlackRock's Bitcoin ETF saw no outflows during that 2-day pullback. Now you have Morgan Stanley today, they're starting with 15,000 advisors, just launched their Bitcoin platform. They're going to have all these 15,000 advisors pitching. I think it's Fidelity's ETF and BlackRock instead of launching their own ETF, but now they're giving their clients who have more than $1.5 million in assets under management, who have more than that in their accounts, which is probably most people at Morgan Stanley, access to these ETFs starting today. Okay, this is trillions of dollars having access. Not all trillions go and come in 5, 7, 8 trillion, but you have all this access that wasn't there. That's now there. You couple that with Trump looking really, really strong. I understand that. Kamala, again, we talked about that in the interview. Kamala is gaining momentum. She'll probably gain a little more momentum, today, tomorrow, in a conference, stuff like that. But overall, you're going to see a record. They're coming out with lots of interviews now, past interviews of how she really feels and how left she is. And I think you're going to see Trump win the election. I think you're going to see that this year. If you do, he is pro-crypto. He's taking tons of money from crypto. He wasn't pro-crypto. He never went after the industry like this current administration did. I mean, they went after the banks. They went after everybody. They launched personal attacks. They started suing everyone. This is going to open door to new regulation, which means more innovation, more tokens coming to market, and billions and tens of billions of capital flowing into this space, which has basically been halted because there's no rules. There's no regulations. There was supposed to be regulations for 3-4 years. I mean, it's been so bad when you look at it. Look at Mike Novogratz and Galaxy Digital. I mean, they've been filing for the last 3 years, have everything in place, easily meet the requirements to file for a listing on NASDAQ. And this current administration said, F you, even though he's one of the biggest, I wouldn't say one of the biggest donors, but a very, very big donor to the current administration. A lot of that is going to change. So now you have this favorable market landscape for Bitcoin. And finally, if you look at the Bitcoin halving, which took place 3 months ago, happens every 4 years. That reduces the supply growth in half, which is massive. That's why we see Bitcoin absolutely take off over the next 12 to 18 months after that, every single time we've had that halving. It only happened 3 months ago. In the first 3 months, 4 months, as I showed on the webinar that we had, it's usually slow, and then you see this massive rise in Bitcoin, hundreds and hundreds of percent every time. And that's what happens when you reduce the supply growth. But now you have this massive demand that you never had with all the institutional money coming in, where it's trillions in assets, where this was a retail move in the past. Now it's not a retail move. This is institutions getting in. People want to own Bitcoin. And it's not just Bitcoin, because when you see after these halvings, the rest of the crypto market goes up more than 3 to 1 compared to Bitcoin during these times. Kind of makes sense, right? If the underlying asset or a sector or the underlying commodity goes higher, it's sharply higher, what happens? The most riskier assets go much, much higher. But we're not even talking about the riskiest cryptos. We're talking about the next 100. We're talking about the Microsofts. We're talking about the NVIDIAs. We're talking about the best companies, right? The Googles, the best cryptos are down 80% from their highs. And it offers you an amazing opportunity. So I did pull up a chart. And this was, I had an issue, my last issue went out yesterday. And I pulled up a chart just to show people why this is significant. And I went to the last halving, because I've been doing this for a very long time, 6-7 years, writing about crypto. And I brought up a chart, which I'm going to put up right now, which you probably see on the YouTube page, but if not, I'll go over it. And this is from May 2020, right? This is right after that halving in 2020, before this previous one in 2024. And you see some of my names down 33%, 34%, 13%. of portfolio's not doing that great. And 1 year later, I just want to show you the gains. And this is why I've been pushing this so much. This is April 2021, and if you look at the difference, Binance were up 4,483%. A year later, Ethereum was up 2,300%. Engine Coin up 2,500%. Silvergate Capital, we're up 700%. Yes, we got out of that well before the shit hit the fan. Voyage Digital, again, one of the ones we got out before the shit hit the fan. We recommended that at 86 cents. That's a stock. It was $23. It's 2,600% gains. And you look at it, Litecoin up 500%, Tron up 400%, Gnosis up 500%. Right, these are Decred up 900%. These are gains 1 year later, and this is why I push crypto so much during this time, because we have these massive catalysts coming. The gains that you could see in this sector, you cannot see almost any place else that you're going to invest in. I don't care what you invest in, okay, unless you have access to just depressed assets or assets that the government seized, or, you're a super insider getting, just founder shares of a company at 2 cents that's going to come out at 50 cents or whatever. 99% of investors, you're not going to see these gains because so many companies come out and they IPO at such crazy valuations that most of the growth is already captured, right? And that's a liquidity event, right? People are getting out of their stock. A lot of people are getting out of their stock to sell it to retail investors. Remember, all this shit gets sold to retail investors. That's what SPAC's about. That's what IPO's about. Some of them work out great, but a lot of them, it's usually the top of the market, like with Uber. Finally coming back. You saw it, Snowflake. It's not even an IPO price. You look at, I think it's 85% of SPACs are below like $2, $3 now. I mean, they came out at 10. Right? So when you're looking at this industry, and the gains that you can make are exceptional. Is it risky? Of course it is. You just saw a 15% decline over the past couple of days. But it's giving you a greater opportunity to buy these names, which is why I offered a 75% discount to my crypto intelligence newsletter. And that can be found on CurzioCrypto.com. Again, that offer was only for 24 hours. And because crypto really collapsed. Again, timing's everything. I wish it did a couple days later. And again, this is a surprise. The market came down, but it did rebound. But I'm going to extend that to Friday to give you the 75% off, and then we're going to go back to a regular price. So if you're interested, watch the video first, watch the webinar. It's live. It's 100% live. You see me going, it's cool. I'm showing you, all the catalysts. I'm bringing up, just like I was doing right now, just bringing up like different charts and figures, but showing you the data behind of why I'm investing my own money in crypto right now, because the opportunity is absolutely fantastic. There's just so many tailwinds that are going to happen over the next 6 months into next year and going forward that you could really make a lot of money in this industry, especially not just buying shit names and meme coins. I'm talking about buying like really good, these are technology companies, these are software companies, buying the best names, the top 100, getting the Microsoft, NVIDIAs, the Googles and stuff like that you can get an 80% discount to where they're trading. That's where the opportunity is. My job is to try to make you money. If I don't, you subscribe to my newsletter. I don't, you're never going to subscribe to any of my products. So I want to try to get you in when I see that opportunity. Right now, out of all the years that I've done crypto, I've never seen a better opportunity to invest in crypto than right now, right this second. You might see a little downside. Yes, it's risky, but it's a great place to put your speculative capital, because your speculative capital is meant to hit grand slams, not home runs, grand fucking slams. That's what it's for. That's what you want to do, okay? And this is the opportunity to hit grand slams. You don't want to invest speculative capital where your upside's 30, 40%, but your downside's 100%. No. You want to invest that speculative capital where your upside is almost unlimited. And the gains that I just showed you in a year's time after the last halving, even in our portfolio, the average position was up over 600%. Okay, I've never seen that in anything I've invested in 30 years. And that's the opportunity you have right now. It's going to be volatile. It's going to be crazy. I'm not telling you to sell everything and throw it into crypto. Just a portion of your speculative money. If you put it in here, you have the opportunity that small portion could become bigger than your overall entire portfolio that you have. And that's the opportunity you have there. So again, watch the video first. You'll know exactly what I'm talking about. And you could do that by going to CurzioCrypto.com. So hopefully you love that interview. Let me know what you thought. FrankCurzioResearch.com. Going to be back tomorrow for Wall Street Unplugged Premium members, our podcast. And I'll see you there with Daniel Creech. Take care. Love this episode of Wall Street Unplugged? I think you'll really love Wall Street Unplugged Premium. The Wall Street Unplugged Premium is my members-only podcast where I dive even deeper into this week's events. Well, I'll do even more than tell you what's moving these markets. I'll tell you specifically what moves you can make today. So this is going to be about trading. Put big money in your pocket right away due to the inconsistencies I see daily in the market. I'm talking about specific investment ideas I'm recommending and tracking each week that I believe will be impacted directly by everything I just talked about today. Plus, you're going to get the chance to go even further down the rabbit hole with me and my co-host, who's Daniel Creech, as we discuss which of these week's trends could turn into massive windfalls. Could the big trends that we see lurking on the horizon, also the news we're picking up from our network of insiders, which has gotten bigger and bigger thanks to you and so many people listening to this podcast in over 100 countries. And you get a chance to talk to me directly in my special Ask Me Anything Q&A session. All of that and a lot more, like premium interviews with world leaders in finance, technology, industry, and politics. This is all part of Wall Street Unplugged Premium. And becoming a member is super simple and super cheap. So head on over to WSUoffer.com to check it all out. Sign up today and you won't miss a thing. That's WSUoffer.com.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.